All right, everybody. So today, taking a look at the various markets, natgas setup for a intraday trade. And let's just go right. So you saw on the hourly, it was just pulling back. It hit the pullback right here, and you know that this market, the key thing here is knowing that this market has a lot of relative strength. So if you find a market that has the most amount of relative strength, it's not a good idea to short it. And as a general rule, if a market is very weak, it's not a good idea to long it. So if you have like a list of markets, I saw natural gas at the top of the list in terms of having the most relative strength. So I mean, look at this. This market is just very strong. If you take a look at the daily, you'll see what I mean. All right, so that's just something to keep in the back of your mind. Why is this important? Because a lot of the turns, the moves, they don't work on markets that are weak. So bullish setups, they fail on bearish relative strength, or bearish relative weakness, and bearish setups fail on bullish relative strength. So it's always, as a general rule, you'll see this over and over again. All right, so where am I? All right, so here it rallied and started hitting the pullbacks and breaking this low, and just rallies and pulls back. So I'm observing this down, 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 down. The key thing here is that initially the volume did come in here. Was buying activity. After that, one of the things I taught you guys on prior video was you want to watch the trend of the supply and the trend of demand, and you can see that the trend is basically decreasing in terms of supply, right? So it's like decreasing, and the demand had a pop here and here. The second thing you want to observe in terms of wave volume patterns, is it below or above the average? The wave volume is clearly less than the average here, here, here. So that means that the supply is not there. All right, so that creates the context or the environment for a turn, for a reversal. All right, so two things. First is the trend increasing or decreasing? And you see the selling volume is decreasing. Second thing is it less or more than average? And this is the average line here at the bottom, white line, and you can see it's less than the average. Supply less than average, supply less than average, supply less than average. So I just keeping that in mind, seeing a bullish pop, knowing that these conditions for lack of supply and declining volume means that it creates the environment for a reversal. And that's what it did. First it created this, then it created this rally right here. So this right here is really important. All right, so after this, I want to see how it performs on the pullback. So this is where it becomes very confusing. All right, this is where it becomes very, very confusing, and you just have to learn how to accept risk. That's what it comes down to, or just skip this. Right? So the confusing part is that the pullback had just way too much supply. Look at this pullback. A hell of a lot of supply, right? A lot of supply. So it gives you the possibility that the supply has renewed and will continue to go down. Now what changes that possibility is on this test and this test, it just totally dries up. The supply totally dries up, right? So this leg down was some type of ending action, right? It's done and tested, retested on no supply. Then it popped up, giving you a nice little reversal bar, which is one of the things that I look for. So this is the green reversal bar, and has followed through with a minor breakout of this area. Test gives another reversal bar, and it just keeps on going. And there you go. Right? So this is the analysis of a turn. Now, what else do I want to see? Yes, there's a lot of volume and all that background on the left-hand side. You have declining supply. On the right-hand side, you have a change of behavior followed by pullbacks on low volume eventually after this downward heavy volume move. And then you have that thrust that is ready to mark up. Yeah, you got all that, but I want to see if there's accumulation in the background. Sometimes it's visible, sometimes it isn't. So we'll see where it is. Yeah, over here it's not visible. It's just not visible. Nothing really more to say. That maybe you could consider this. That was about, I don't know, I think it was 1,000 contracts, but it's not getting picked up. So I would say it's not visible. Then over here, something is visible. I think that's 1,100, right? But I want to see this here on the left-hand side, not on the right-hand side. In any case, it dries up. How do you know the small, small candles, or this little range? This means whatever it is, supply or demand, is both. It's coming to an end. All right. This is the end. Right. Now, if this was here pushing up price, it'd be a different story, but it just didn't give me that. Right. Then after that, eventually just breaks out. You have that breakout come in, breakout volume come in, telling you price is going up higher, and it did. Until the break right there. Right? So from this point onwards, bullish, 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 break. This must have been distribution. Why? Because it couldn't hold. And then you had a break, and then all of this, breaking down, until you get a reversal. This is the reversal here. This is that reversal, and it's legit. How do you know? Remember what I explained to you guys? 1.7 bigger than average, and the demand before it is just weakening. All right, so that's it, folks. So this is not all the elements are there, but if you're, it requires some ability to take some risk. And that's how natural gas, the turn today occurred on natural gas. All right. Let's take a look at some other markets and see if there's anything. All right, so this is ES, right? So this I'll show a failure and how and why it failed. All right. First, there was an attempted bounce here, right here. This was the biggest volume in 11 up waves and 2.4 times the average up volume. This wave, okay? This wave. So in my mind, I know that the buying pressure is coming from the lows. So after that, it's going to pull back. It hit this area of supply and starts absorbing it. This is why it goes up, down, up, down, up, down, up, down. It's absorbing this supply area, and then it pulls back and does a spring. Now look at the pullbacks. See the pullbacks? After that, after big blue, look at the red. So that's giving you a hint that there's no supply, no response to the heavy demand that came in. The demand came in. Once demand comes in, you have to ask a question, and the question is, how does supply respond? And it does it in a very weak way. So demand is in control. And this spring of this low initiates this move. But it's so small. And the reason is because we're in a strong downtrend. So in a strong downtrend, uptrend moves have certain characteristics. Uptrend reversals have certain characteristics. One is it's almost, it's usually a small move. And the second is you have deep tests and springs of these lows. So when you counter trending, it's gonna take out this low, and sometimes, and then other times, it might do something like this, but the move is very, very small. It's a very small move. All right. After that, they spring this low and reattempt, but the reattempt failed. If you see here, volume increased to 2.4, which is significant. Breaks these highs. 40,000 contracts. So someone's either covering or someone's either buying. It looks like buying activity, right? And then when it pulls back on low volume. Not low volume, but less than average. Or around average, nothing spectacular. All right? Nothing spectacular. And then after that, actually that's a hint right there that this is 1.1 times average volume. It should be less than that to consider the trade. This is 10% above average. If it was like 80%, you might have had a bigger move. In any case, the pullback was not as low volume as it should have been. And when price tried to go up, it kept meeting resistance. Every time there was a green bar, there's a red bar. Every time there's an up bar, there's a down bar. And you can see that in this range. In this area. See, every time there's an up bar, there's a down bar. Every time there's an up bar, there's a down bar. Every time there's an up bar, there's a down bar. So it's like it's being blocked, meaning the demand is being absorbed by supply in order to go lower, and that's what it did. So they used this to sell into until it broke. Right? All turning point attempts fail. All of them. See, another one here failed. And the reason is really simple. In a strong markdown, you cannot buy, otherwise it's going to have a small move. This is the problem. The market is in a strong markdown. So that's why you have to know the higher time frame context and relative strength. It will be very helpful. All right, that's all, folks. Thank you. Bye.